This episode of the podcast is brought to you by Franny's Pharmacy.
Now more than ever, it's important that our society focuses more on our mental and physical health. At Franny's Pharmacy, the team is committed to their community's need of being happy, healthy, and stress-free. Come learn how Franny's Pharmacy can assist you in a clean, professional environment with their expert bud tenders that are excited to educate you about the benefits of their lab-tested, DEA-certified CBD products. Franny's Pharmacy also offers wholesale and franchise opportunities. Visit their website at frannysPharmacy.com, and that's pharmacy with an F, and use the promo code CannaConnect10 for an exclusive Cannabinoid Connect discount. Again, that's Franny's Pharmacy with an F.com and use the promo code CannaConnect10 for an exclusive Cannabinoid Connect discount. Franny's Pharmacy, putting the farm back into pharmacy. Hey, Adam, how are you?
I'm doing great, Kevin. Thank you.
Where are you based at?
I'm in San Diego, California.
Okay, gotcha. Yeah, I mean, the looks of your office, I can tell. I mean, if there's sun out there, maybe a little overcast, but I was getting Cali vibes for sure.
Yes, yeah. Maybe it's just radiating off of me.
That's true. You do have a very California look, my man. But
ironically, originally from New York City, so.
Oh, there you go. So you've seen the best of both worlds, East and West Coast.
That's right. It's like Tupac and Biggie.
That's right. Exactly. Well, that's actually a great segue because I did want to talk about your background before we get started. From what I gathered from research and from what was sent to me from your team, you have over 30 years of business strategy and leadership experience. And in 2019, you were awarded a prestigious award from Ernst Young as Entrepreneur of the Year in 2019. So, Adam, I mean, why cannabis? You know, I think in 2021 is when you made the jump. So, talk us through your background and what led you to where you are today as the founder and CEO of FundCanna.
Yeah, thank you. Originally, as I said, from New York City. And I didn't start in finance. I actually started in manufacturing and sales. But while in manufacturing and sales, I learned a bunch about factoring, which is a form of finance. We used it to manufacture our goods. I was in the apparel business, and I never knew that I would call on that later. But from there, I worked on Wall Street for a little bit. Doing a bunch of trading. I was trading stocks, but that was a lot of analytics, research and analytics. And then I moved out to San Diego and went into the student loan industry, where I was able to basically apply a bit of what I learned regarding the manufacturing and sales, and really the sales side of that, but distribution, and apply it to student lending and be very analytical in terms of how to grow the business, what was working and what wasn't. And I learned that there was a lot of demand for access to capital, even at the individual level in terms of both paying for school and then after school consolidating that debt. While I was working in student loans, I started my own student loan company. And at that point I had done about 14 billion in on balance sheet originations through channels that I controlled. But I started my own business, and just a couple months in, the recession hit in 2008. And I'll get to how this leads me to cannabis, but so 2008 hits, and I have 14 billion under my belt. I had paid millions of dollars in fees to banks. My assets all performed very well. And I had tens of thousands of very happy clients. But I found banks weren't calling me back when the financial crisis hit. And I started to realize that very quickly that I was in trouble. Despite all this business that I had given banks, I hit a wall. And I went out to lunch really alone, just to think through what my next move was going to be and how I was going to handle it. And while I was there,
and that was mainly due to the crisis, right? I mean,
it was purely due to the financial crisis in 2008.
Yeah. Okay.
while sitting there, I had they received the delivery. The restaurant received the delivery. It was a late lunch. They were winding down from the lunch rush and getting ready for dinner. And this delivery comes in. And I had this realization of, if I've done all of this origination of assets and banks have made millions in fees, but they won't return my calls, and I'm having this realization that they're tightening to the point that I will not have access to capital, how is this restaurateur paying for this delivery? And so I asked my server for the owner of the restaurant. He walked over, and he ended up sitting with me, and we spoke for 2 hours.
Wow.
And what I realized was he wasn't getting access to capital, and so that started me on this deep search about how generally small business accesses capital. So I had been lending to consumers, and at that lunch, I was sitting with that restaurateur. I decided I was going to pivot and service small business. And I started a company in 2008 to service small business, and grew that business to do a little over 2 billion in originations for non-cannabis small business. And then how I got to cannabis, and I'm fast forwarding, I ran that business for about 13, 14 years, and grew a team to over 200 people. And we serviced hundreds of thousands of clients, underwrote over 1 million small businesses. And in aggregate at this point, I had done roughly $20 billion of on balance sheet originations to both consumer and commercial entities. And during the pandemic, we're all working from home, and business and commerce is practically at a standstill. And I started to reflect on what's next, right? The business that I was running,
as the true entrepreneur does, right? You got to pivot.
Well, that's right. Well, and this is the thing: the business that I had founded in 2008 was still doing very well, because we were keeping tens of thousands of businesses going with capital, and they were slowly repaying. We didn't have a surge in default because our underwriting was sound, so we didn't overextend them. But I had the realization that it was a 13, 14-year run. It was amazing. And I wanted to move on to something different. And with small business, I felt like I was helping to serve the underserved, in the sense that banks decline traditional business at a rate of 75 to 80%. That's an incredible statistic. So that means only 20 to 25% are being approved. So when we're in the middle of the pandemic and cannabis was deemed essential, I started to think about how fragmented the industry was. And I started to do research on the cannabis industry, and realize that they are also underserved and underbanked, that it's still Schedule I drug and is federally illegal. And although legal in roughly 39 states at this point, and both for medicinal and recreational use, it's so fragmented in taxation and the way each state oversees the industry, that there's going to be a need. So I began doing research early in the pandemic, and in the summer of 21, I let my investors and my private equity sponsor and my board know that I wanted to move on, and the company was in a great position, but I decided that I was going to bring my knowledge, 20 plus years of funding, into cannabis, with the idea of understanding the supply chain, understanding the ancillary businesses that service that supply chain, and coming up with some products that would be creative and flexible and renewable sources of capital for this industry.
Mm-hmm. Yeah, no, that's a great origin story, and there's a lot to unpack there. The first thing I want to ask you is just, I guess, the obvious question: what did the board think? I mean, you're working on this, this company that basically provides capital to small businesses, right? And pandemic hits, you see cannabis is essential. You see that basically this industry, which is very fragmented, is thriving during this time of chaos, right? And so when you make the announcement, what are their reactions to this?
Well, we had a good relationship, and so of course, they tried to convince me to stay, and I was appreciative of that. But I let them know that this wasn't about what we were doing; it was about what I saw and what you just laid out. That I saw an opportunity within the industry, the cannabis industry, but also something that was going to be exciting. That I knew it was still early. There were going to be issues and problems, but I wanted to roll my sleeves up. I wanted to work with operators, understand the areas of pain, and try to help solve some of that. And I felt like we had done some amazing things for traditional small business, but it was becoming a bit too routine. And it was time to move on. So I think after some back and forth, they were supportive. I also think it helped, quite honestly, Kevin, that I wasn't going to be competing, right? I was moving to an industry
Right.
that to fund an industry and service an industry that my investor base and my board did not service. And so we could be on parallel paths without crossing one another. And I think it made it much easier for everybody.
Yeah. No, that makes sense. I mean, it's a best of luck kind of thing. There's no competition at all.
Correct.
Different industries, altogether. That makes sense. You mentioned how highly fragmented the industry was when you first became interested and saw the fragmentation. What were some of the early surprises from your perspective entering the industry? I mean, you talk about the underserved communities of small business owners, right? And how they are seeking capital. But you take a highly regulated industry like cannabis with so many limitations. I mean, the lack of banking, 280E. So what were some of the things that just stood out to you? And what did you really want to just start tackling?
Well, you touched on a couple, actually. I would say that I'm a believer in the industry, and both recreationally and medicinally, I've seen the benefits firsthand and through family and friends. But I was not intimately familiar. I mean, I worked over a period of a year and a half before leaving in my free time to read up and try to understand all I could. 280E was a huge surprise to me. The idea that because the industry is considered illegal at the federal level, that cost of goods can't be written off, but the full taxation is still in effect.
Yeah.
That was a bit of a shock. And I was naive in a sense 2.5 years ago. But also the fact banking you touched on, and I think this is interesting. So even though traditional business is underbanked, but there are roughly 15,000 banks, all of which are available to traditional business. There might be, inclusive of credit unions, give or take about 700 of those 15,000 that will service cannabis. And that's just for deposit accounts. So that's to say nothing of access to debt or capital. And so if 15,000 banks are servicing small business, and the approval rate is 20 to 25%, but only 700 are servicing the cannabis industry. I was very intrigued by how that worked. And then, of course, licensing is different in every state. The way a business or an operator goes about applying for a license, depending on the state, it's totally different. The cost to acquire a license, different across all the states. The timeline, different. And then this concept of intrastate versus crossing state lines, that was a whole nother piece that I was really curious about and interested in learning. Multi-state operators, how were they doing that? Large growers in Washington state, and they can't move product outside of the state. And then as I really dug in California, it was wild to see this disconnect between growers and retailers, and the amount of licenses and how that was working. And then this concept of price compression and taxation and the illicit markets and how it all interplays. And it's actually a very complicated ecosystem of passionate, driven entrepreneurs and operators. And I was blown away at the people that I was meeting and all of the things that I was learning. And I still am.
Yeah. I mean, the stereotype, right, for so long is like they paint this picture of who these operators are, or who the end consumer would be of cannabis. But when you actually immerse yourself into the industry, as you have, being the founder and CEO of FundCanna, as you mentioned, you realize these are intellectual people. These are hardworking, resilient people. And so it's just encouraging to hear, you say that, coming from another industry and having so much extensive experience and background. Adam, I want to ask you, what is the current state of lending in cannabis today?
So I will say with a bit of bias, Kevin, although I'll first say that there are only 700 banks that will service the industry. There's still the ability for cannabis operators, as long as they're legally operating, to have a bank account, which means they have a place to put their money, they have a place to move money from and to, and a way to pay their bills and their employees, and not only deal in cash. However, the fees are often high, and I think that that's one piece of this banking. Now, in terms of lending, the reason I bring up banks is if banks aren't typically lending to non-cannabis operators, what I discovered is banks aren't really lending to the cannabis industry much at all. The instances that I see are typically related to real estate. But outside of real estate, traditional lending from banks is almost non-existent. But there are, FundCanna is an example of a few companies that are providing access to capital for the industry in the form of debt or vendor financing or equipment leasing. And so money is readily available to the industry. And between being banked and having access to capital, then it's just a function of making sure that the debt is used properly.
Mm-hmm. And I mean, the current state of the economy today, I mean, is there restrictions when it comes to these operators or these business owners trying to get funding, to access capital? I mean, is that a hindrance right now with everything else going on?
So it's a good question, especially given the timing of what we see, right? Fed released minutes today regarding inflation and why they raised rates. So there are a lot of pressures on the economy in general, but the answer is no, it's not a hindrance. Money is available. We have not changed our underwriting criteria in the way of tightening. We've evolved our product as we learn more about our client base and the need of the supply chain, but we have not tightened in regards to inflationary pressures or macroeconomic factors at all. And so it's not a hindrance. But I do think it's an interesting time for cannabis operators between cost of goods and cost of labor. Expenses have definitely gone up. Mm-hmm. And so in that regard, we work very closely with our client base to make sure that when they are borrowing money or when we are paying vendors on their behalf, that we're in line with them on managing payment relative to revenue and expense, right? And so in that regard, I think we work closely enough with the operators that it becomes a non-event in terms of inflationary pressure and rates.
Mm-hmm. You touched on FundCanna's client portfolio. You want to talk a little bit about that portfolio? I mean, is there specific cannabis companies that y'all fund and work with? Is it ancillary? I mean, is it plant touching, all the above?
Yeah, so we will work with the entire supply chain, both THC, CBD, hemp, regardless of where they fall within. But from grower to manufacturer, processor, distribution, retail, and then ancillary, packaging vendors and the like. If anyone is touching the supply chain, touching plant or servicing the supply chain, we will fund them. The only requirement is that they're involved with cannabis, and that's a whole plant. But what I'd say to answer your question a bit more specifically, we're finding, interestingly, that if, for example, we fund, let's say, a processor or a distiller, and we pay their manufacturer of crude oil, as example, the exposure to the manufacturer of crude oil, now they're getting paid right away. The processor is getting product without having to lay out any money. And we're creating a bridge for them so that they can create revenue while slowly paying down the chunk instead of COD. But by exposure, that manufacturer is then coming to us and asking us to pay for their biomass or their plant that they're using to manufacture. And then we get exposed to the grower, the cultivator, and he wants to expand the acreage, and we're funding him with working capital so that he can add 40 acres of grow. So it's an interesting chain of events. It's something that this kind of interconnected commerce did not occur for us in traditional SMB.
It's almost like, I mean, you have to, because the industry is so new, and in some cases these operators, these business owners are so new entering the space that they need help connecting the dots, right, of where to go to next. So your role of being the funder has basically turned into the strategizer, the connector, I mean, is that accurate to say?
There are elements of that for sure, but what we're finding is there are a ton of savvy operators that have a strategic vision, but they don't have the free capital to execute on the vision because everything is COD, or if they're getting terms, the terms are 15 to 30 days. However, their cycle from laying out capital to receiving revenue for that segment, because they're always stacking, right? They may buy plant to turn into oil, or buy crude oil to turn into a distilled oil or cartridges. And even if they get 15 to 30 days, their process is 2 to 8 months. And so they have to lay this money out, and then the money is dead for a period of time, which doesn't enable them to execute on growth or the next tranche of purchasing product. So they have this amazing vision for where they want to go or how they want to expand, but they don't have the free capital to execute. And so what I'm finding is the access to money and the structure of how we provide the money is really just enabling their vision or strategy so that they can execute. But they're restrained without that money coming in to their ecosystem, because what little capital they get goes right back into prepaying for the product for the next round. So it becomes this, I'll call it a vicious cycle, where they're hamstrung and they can't grow to the next level because the money out is waiting for more money in. And then when that money comes in, it has to go right back to pay the COD bill or the short duration term. So by giving them, by paying their invoices and giving them terms that match their revenue cycle, we're finding it frees them up to then grow. And then their next order can be a little larger. Their sales and therefore their revenue then start to go up. And then it becomes this almost like diagonal stair step where the additional money leads to a bigger order, leads to more revenue, leads to another bigger order, and so on. And that does mirror what my experience is in traditional small business. But but I never saw this interconnected play like we do within this supply chain. This supply chain is very tight, and it's really interesting to be a part of.
Right. I would imagine, and ever evolving, right? I mean, things are constantly changing within the industry. Well, Adam, I mean, you have, like we mentioned at the beginning of the podcast, over 30 years of business experience, strategy, leadership, so if you were to give advice for business owners listening or operators listening or watching this podcast, and they're looking to access capital, at reasonable terms, what would your advice be for those people?
Well, first, what I would say is it relates to FundCanna's ability to provide access to capital. We only work with legal companies. They have to be licensed. They have to be compliant. They have to be operating already. And by that, I really mean they need to be revenue producing. And the reason that is, and I want to make sure I explain why, because I don't want people to think that I'm anti-startup or anti-early stage. But my expertise in part is in assessing what's affordable. I never want to overextend someone, right? It's not about how much money we can put out. It's about how we fuel growth. And when we look at revenue producing businesses, you can look at the revenue and then back into what's affordable. Basically, what kind of micro payments does the business indicate it can handle without burden or stress? So I think first is making sure that a business is legal, compliant, operating, and producing revenue. And then from there, just have a game plan. In other words, a use of capital. I think debt is an amazing tool when it's used for a purpose. So we've all been taught, even as individuals, right? What we were taught, whether by professors, parents, grandparents, friends, debt is bad. And the reality is debt is not bad. Debt is the opposite. Debt is amazing.
It builds credit.
Say it again. Sorry.
It builds credit at an individual level. I mean, that's how the system works, right?
It does, but it fuels business. And so you look at companies like Apple and Amazon, stockpiles of cash, both of which also borrow. Why? Because it's much better to use someone else's money if you can make more on that money than it costs you. They would rather keep Apple, their 200 billion, parked wherever they have it parked around the world, and borrow from someone, provided whatever they're going to do with that borrowed money yields more for them than it costs them. That is the number one rule for using debt properly, is can I make more with this money than it costs me? And if the answer is yes, then debt is amazing. It is the ultimate accelerant for business. And not just in cannabis, but certainly also in cannabis.
So that makes sense to me. I'm sorry to cut you off, but like right now where we're at economically, right? Like with the enormous amount of debt that's out there today, and how the Fed's tightening and whatnot. I mean, is that model sustainable post this recession? I mean, like, basically what I'm saying is that's how it's been, right? But given the current situation, do you foresee that model ever changing or evolving into something else?
So I think the model, the model of borrow at X, and as long as your revenue is X plus or Y, some number greater than you, then that model will always work. It will evolve, and you'll run through periods where your margins may compress. And so, but again, the rule for me in business, even in my personal life, has always been, when I believe I can do more than the money costs, I want to borrow, and I want to borrow, right? And I was taught that debt is bad, but then later in life, I was taught by a very wise person that debt is amazing. I got tricked into raising my hand when I was asked, if you think debt is bad, raise your hand. And of course, I raised my hand in my late 20s. And then I got schooled for 5 weeks, literally, about how amazing debt is and how it can be used to make more money and compound income, revenue, wealth, you name it, if it's used right. And really, I summarized using it right, using it properly is just, if you can make more, borrow. And I think in this environment, we know, for example, with FundCanna, our cost of capital is fixed. So regardless of what the Fed does with rates, if someone were to come to us today and we were to pay their vendors today or provide them directly with working capital, they know upfront what their cost of capital is. And it's a time-based cost of money, but they know what it is. If the Fed were to raise in the middle, I'm not changing that cost of capital. So they know what it is. Now, if they have projects that they want to tackle, or they want to place orders, provided they have a sense of what that will yield for them, it's easy to do. And candidly, between our account executives and our sales team and our underwriting group here, we'll do everything we can to help them solve for that answer if they're not sure themselves, right? It's not a high pressure circumstance. Our approach, Kevin, is it's got to work for them. If it doesn't work for them, it certainly isn't going to work for us.
Right.
So it's about finding a fit. And I do think, regardless of the inflationary environment or recessionary environment, that approach does not change.
Mm-hmm. No, that makes sense. I appreciate you clarifying that. And speaking of debt, why, in your view, is debt financing more attractive to issuers than, say, equity?
So this is often a talking point within this industry, more so than non-cannabis. And I mean, the simple answer, and I'm happy to elaborate if it makes sense, but the simple answer is debt is like the ultimate business, in my mind. Debt is like the ultimate business partner, in that it gives you the money, you use it however you want without any say from the person that gave you the debt. You create the yield, you pay it back, and you still own 100% of your business. With an equity partner, they'll often want input or a board seat or say. And even after they've made their money back, you're successful, you return their equity to them, they still own a chunk of your business and you're never getting it back. And as a operator and an entrepreneur and a small business owner myself for the last 20 or so years, I don't want that. I don't mind having partners. In fact, I love having partners. And but I don't, if I have the option to take money as debt with the idea that when I pay it back, the cost of that capital is a lot less than giving equity away that I can never get back for myself. And so in that regard, I think equity is the most expensive capital available to us as business owners.
Yeah, I mean, that makes sense. I mean, as a business owner myself, I mean, that's the big challenge that you come up with. As launching a startup is, well, okay, this person wants to be a business partner, or I want this person to be a business partner. What is the value that this person's bringing to the business, right? In terms of equity. And then from there, it's all about human capital, which is the most important thing. Is that person going to be reliable? Is that person going to deliver on said terms? Can I count on that person? Because you as the business owner are, of course, 100% focused on your business, right? But if you bring other partners in that say aren't 100% and they've got equity, that could be an issue down the road.
Yes. Well, especially, in good times, I've experienced this a lot. When things are going great, everybody loves what you're doing. Everybody thinks you're the greatest operator. And then when things are not going well, everybody has opinions as to how it could be done differently and why you're doing it wrong. And with debt, those opinions are silent. And you can always have a strategic advisor. But when you have an equity partner or you bring equity in, you're giving chunks of your business away. The earlier you are, the lower the valuation, the bigger the piece is that you have to give away. And then the more say those people have. And so my experience is I've raised equity before and I've raised debt before for my own endeavors. And I always prefer debt for the reasons that I gave. It doesn't mean equity has its place. It's just a more expensive form of capital, but it still has its place.
Right. Well, Adam, I want you to pull out your crystal ball here as we wrap up, and just throw out some predictions for the year ahead. I mean, what are some big challenges that you foresee companies still enduring with the federal illegality still in place, and what are maybe some predictions when it comes to federal reform?
So what I can tell you is it's long overdue. It's very good for the industry if we, and this is, Captain Obvious here. I don't think we need a crystal ball, but great for the industry if we can make things legal. It's got less to do, in my opinion anyway, with banking, because as I said, as we covered earlier, banking's available. There are roughly 700 banks, and there are a lot of really cool technology platforms that act like neobanks with money transmitter licenses that can service banking now. So in that regard, I think that's great. But I think the concept of no ability to go interstate is a very big issue. And I think marketing is another one. I mean, the fact that people can't do pay-per-click and they can't use social media, the amount of limitations associated with the fact that on a federal level, it's considered an illicit business, that blows my mind. And then just the elephant in the room always is it's criminal. The decriminalization is vital. I mean, too many people have been prosecuted for something that is just unwarranted. Now, in terms of when, I can't answer that question. I wish I could. I can't answer. It's frustrating to watch it get passed twice and then not make it through Senate. More has been passed twice, pretty recently for the second time, and then it doesn't go anywhere. And then you've got competing bills, and there's a lot of politics involved. And I can tell you, as someone that's relatively new, I'm approaching a year in the space, I can only imagine that people that have been at this for many years, especially operators, not someone like me that's servicing the space, but operators that are plant touching, to watch this political volleyball is very frustrating. And that's not partisan politics, it's just politics in general. Right. So we're long overdue. But I think then taxation is another one. So it has economic, it has sales implications, it has prosecutorial ramifications. All of these things need to be addressed and are long overdue. And then I think the idea that the industry, if it were able to operate as normal industry, would just thrive. The ability to work interstate, the ability to partner and create interstate ventures and partnerships, mergers, joint ventures, and market together, whether it's co-op or collaborative marketing. There's so much that can be done in strategic relationships that currently just is off the table. So, and then the other part of that too, is you have individual state taxation issues, federal taxation issues, and then licensing issues, where it's just unbalanced. And I think once this gets through on the federal level, a lot of the roadblocks or kinks in the hose that I just referenced will begin to open up. And this is such an innovative, creative, dynamic group of operators that once they're given, it's like they're two cliffs with a huge river in the middle. And until that bridge is built, and that's just federal, make it federally legal, then bridges are going to pop up all over the place, because this group of operators, of entrepreneurs, they're going to find all the ways to create efficiency and scale. And they're being held back right now, I think, and I think it's unwarranted.
Yeah, the human ingenuity in this industry is incredible. I mean, with all the roadblocks and barriers that these operators face, they innovate, they get around it, they figure it out. I mean, I've said this before on the podcast, the state of Texas, Delta 8, right? I mean, the emergence of these synthetic cannabinoids or rare cannabinoids are emerging because THC is illegal, but there's an appetite for that psychoactive property. So they're going to figure it out, and so it's just incredible to watch. I couldn't agree more with you. And it's an exciting time. It's an exciting time to be in. And I think you entered the space at a perfect time because, I mean, right post pandemic or, right after 2020, when we really start to see that this is pandemic proof and this is something that the American people want. It's a beautiful thing. And yeah, Adam, before we go, I mean, I want to leave the floor to you. Is there anything that we didn't cover or touch that you want to you address before we wrap up?
No, I would offer just that everything you just said is exactly why I'm in the space. It's I love problem solving. I think our experience in finance and creating product specifically for industries, the fact that we've looked at millions of files and created product that fits a need. It's not about fitting a box. So everything you just said about the entrepreneurs in this space and the innovation that this industry shows, I'm proud and I'm thrilled to walk alongside the industry and to roll my sleeves up and work hard to service them with access to capital so that they can continue to innovate and persevere. And I know that better times are ahead. To your point, I didn't want to wait. I wanted to be in the fight. And I think the industry is far enough along that there's no way to put it back in a box. It's out and it's staying here. And now it's a function of how do we together come up with all the ways to grow and strengthen each other until federal laws pass that enable us to just really take off.
Right. No, yeah, I couldn't agree more. 19 states, adult use, I believe, 35, 36 states that are medicinal. The genie's out of the bottle at this point. There's no putting it back in. And it's a highly capitalized industry. And, FundCanna services are definitely needed. And really appreciate you coming on and sharing, your path into the industry. And, of course, the origin story of FundCanna and the value add that you bring to the industry. So Adam, let's definitely do this again real soon as y'all continue to fund different companies throughout the industry and as the industry continues to evolve.
Yeah, thank you so much for having me on. I look forward to speaking again.
Absolutely. And one last question, where can people find y'all's website and social media if they want to learn more?
Sure, thank you. So fundcanna.com is our website. And then we have LinkedIn, Twitter, Instagram, all the usual suspects. But I would encourage people, please check out our website, and also don't be afraid to give us a call if you've got questions. We've got people here to answer them and to work through problem solving with you.
Yes, thank you so much, and thank you all for listening.
Thank you.
Bye.